I'm Jeff Stanford. Welcome to the Canadian Business Outlook 2009. We're here with Stuart Hall, an economist with HSBC. Hi, Stuart. Thanks for being here today.
Thank you.
There's a major G20 meeting coming up this weekend. I wonder if you can outline for us some of the issues that are going to be tackled at that meeting.
Well, in a sense, the issues are dependent upon from what geographic jurisdiction you're coming from.
Yeah.
For the Americans, the position's been fairly clearly telegraphed that they're looking for further economic stimulus, particularly out of the European nations. Now, by contrast, the European countries have said, at this stage, we've done enough. There's an enormous amount of reticence amongst the chief political actors in the center of Europe to really extend themselves beyond that which they've already done. And so you've got this divide between the Europeans on the one hand that prefer to allow that which has already been done to filter through the system, and the Americans taking a more aggressive stance, saying, you know, we need to really kind of wrestle these financial problems, these economic problems to the ground, and then look at perhaps changing the regulatory environment.
Are these discussions, will they have any effect on what's going on?
Well, as it stands, this particular meeting is in a sense the pre-meeting,
right.
The real meeting taking place at the beginning of April, and the importance of this meeting is to air those differences and
right.
try and find that common ground. I think the expectations have been set pretty low for what can come out of this G20 meeting, given the fact that the divide that exists between not only the U.S., the European Union members, but also those in the emerging market space that have been relatively quiet, but very obviously have issues that differ from the U.S. and the Europeans as well. Talk of regulation and fiscal stimulus probably plays second fiddle to concerns for protectionism, both from trade standpoints, physical trade of goods, but also with regards to the potential for financial protectionism.
Sure.
And so I think that this meeting is in part to air those differences and just try to search out that common ground.
Okay. I thought one interesting thing you mentioned was that Europeans are much more interested in getting the IMF more solvent in a way and taking a larger role. Is that correct?
Yeah, it appears to be the case that the European Union, while they're, no one would officially acknowledge this idea that there is some institutional infrastructure that's gone wanting. Most are cognizant of the fact that the Maastricht Treaty, as it stands, precludes the bailing out of any one of its members. And the suggestion is that some of those members on the periphery certainly are stressed.
Yeah.
And so how do you deal with the issue of potential sovereign risk? And for the Europeans, for the European Union, one avenue is to utilize the structure of the IMF to deploy their capital into the periphery of the European Union. It pays out a second benefit in that the IMF, capable of operating outside the EU into the kind of the former Soviet Republic space, given the fact that European banks have huge exposure to emerging market lending.
Sure.
And having that presence of the IMF coming in a sense, can help to draw a line underneath the risk associated with European banking into the emerging market space.
Sure. So just look at the broader economy, the world economy as a whole. Where do you think we are in this whole process? You must get asked that a lot, but I guess that's the big question everyone wants answered. Where are we in this whole?
Absolutely, that is the big question. I think that with regards to the global economy, the one thing that we've come to terms with is the fact that we are all inextricably linked to the U.S. consumer. 2008, wonderful theory being bantered about. One that I subscribe to as well was the theory of decoupling.
Yeah.
It looked like some of the developing Asian nations, if you look to China or some of the countries that are in and around that area, were almost akin to a level of development similar to that which post-war Europe was experienced, or post-war Japan was experienced, where you have this level of development that is intensive, such that it has its own forward-moving dynamic. And so there was some expectation that these Asian countries that really did not have direct exposure to subprime lending were going to be able to weather these storms, and by extension, countries like Canada would benefit from that continued demand for commodities as these countries continue to develop. Lo and behold, what we found is that developed world financial and economic crisis has most certainly bled over into the emerging market and the developing world space. So the hard reality is is that getting global growth going again is the quid pro quo is getting the U.S. consumer going again, get the U.S. economy going again.
Yeah.
Now, the big caveat is that the necessary foundation is getting financial markets fixed.
Sure.
So for the U.S. And by extension for the global economy, it looks like it's a case of fix the financial markets. Secondly, work on the economy.
Last quick question. What would be some of the signs you might expect to suggest there's a turn coming, we're close to a turn, or there's some light at the end of the tunnel?
If there was one element, one chart only, one stat only, I would look to the housing price indexes. Right now, housing prices continue to head south at a terrific rate of acceleration. Now, getting U.S. housing prices going north of zero, growing again, presupposes a number of wonderful things. It suggests that the banking system is lending once again. It suggests that consumer confidence has returned to a point at which they are now willing to entertain purchasing a house. It also suggests that all of these write-downs that we've been seeing in the financial services sector, in the banking sector, we can then begin to imagine the potential for write-ups as the underlying value of those assets begins to, which is housing, begins to once again start growing. And so if there's one clear signal that things have turned, I tend to suggest that it is U.S. housing prices.
That's great. Thank you very much, Stuart. Appreciate you taking some time out today. Thanks again.
That's great. Thank you very much.
This has been Jeff Sanford. We're at the Canadian Business Outlook 2009.